Hello, traders. FX Pip Collector here. Today is Friday, February 14th, so happy Valentine's Day, everyone. And this is my morning video where we cover the US dollar pairs, including gold, and we also take a look at a couple of the JPY pairs. If you haven't done so already, definitely check out my free Discord community. Link is at the end of the video in the corner and in the description. If you'd like to check out my membership, you do so at my website, fxpipcollector.com, and you get access to all the benefits listed below and more. So, anyways, first thing first is I always like to check the news calendar, make people aware of what the news is every day. So, first thing we have is, well, pretty much the only thing we have today is core retail sales and regular retail sales for the US. Both of these news events can be pretty good movers, especially if it comes out different than what they forecast. Normally, that's when you get a big move in the market. Like if they forecast, zero point 0.2 and it comes out dramatically different than that, that's when you're likely to get a big move in the market. And be careful because every single day this week in the morning I looked and there was no Trump speech on the calendar. And then in the afternoon I looked and there was a Trump speech on the calendar. He talks pretty much every single day of the week, so be very, very careful about that. The market definitely is going to have some volatility if Trump does some sort of a speech or something today. So, anyways, the US dollar is pushing down really hard. I'm hoping that this really is the end of a wave B. It's definitely starting to look like it is. Nice big impulsive move down. If this really is the end of a wave B, I would expect it to go all the way down to this area, probably taking out both of these lows. Probably going to end up, there's going to be pullbacks along the way, but I think over the next probably about 3 months or so, we should be in a downtrend for the US dollar, probably making a wave C. If we know that we're in a downtrend on the US dollar making a wave C, then we should know exactly what to do on every single one of these dollar pairs. So keep that in mind. The dollar is the roadmap for me to trade all the US dollar pairs. So moving on to the euro dollar. Euro dollar has definitely been gaining some really nice strength. And the euro dollar broke structure weeks ago to the upside, so the trend has been up anyway. So this is one of the main ones that I've been looking for longs on because the trend has been up ever since we got that break of structure. Now I got my Fibonacci extension on this first wave up, projected off the bottom of the second wave. I think there's a very good chance that this is a wave three, and my target for wave three would be around the 161.8. It's not like there's not going to be pullbacks on shorter time frames. There probably will be pullbacks on shorter time frames, but I think there's a very good chance we're in a wave three, and we're probably going up to someplace around the 1.065 area. So taking it down to the 1 hour time frame, that information should tell you a lot. It should tell you exactly what you should be doing. You should not be looking for shorts unless you may be trying to scalp or something. And even then, I wouldn't recommend looking for shorts. I would be looking for pullback entries. I'd be looking to get in every single time I saw a three-way pullback. If I see 1, 2, 3 down, if I put my Fibonacci retracement on the last push up, then that's where I would be looking to get in the market is at the end, the three-way pullbacks. Hopefully, taking it all the way up to about that 1.65 area. Now, I have no idea whether it's going to pull back today. I mean, honestly, it could just make little teeny pullbacks and just keep on trending up. What I'm saying is when and if it does pull back, that is where I will be looking to get in. So moving on to the pound dollar, pretty much same story with all these dollar pairs. I think that this first push up is a one. I think this push down is a two. I think we're likely in a wave three. Pound dollar is breaking structure, which I think confirms the whole move down is likely over. If the whole move down is over, then we are likely finishing this wave C, probably an A, B, C, or B. And we're probably, this first wave is probably going to take us up to about the 161% Fibonacci extension, which on this pair is right above the 1.28 area, someplace between 1.28 and 1.285. So definitely very bullish, I think, over the coming weeks. Going down to the 1 hour time frame, I definitely wouldn't recommend trying to go short. Even if it does push down, I don't think it would be worth trying to go short. I would look at any move I see to the downside as nothing more than a crutch into the uptrend. I'd be looking for 1, 2, 3 way pullbacks, which there was a beautiful 1, 2, 3 way pullback yesterday to get in. And that's exactly what I would be looking for today. 1, 2, 3 pullbacks. Now I have no idea whether it's going to make a pullback like this today or whether it's going to do it next week or whatever it's going to do. It possibly could just keep on going up like that. I'm just saying that if and when it does make a pullback, this is what I'll be looking to get long. I will not be looking to go short. I will be looking for longs probably for the next several weeks. So moving on to the Aussie dollar. Aussie dollar is definitely a little different than the other two, but it's pretty much the same type of thing. I think this is a one, two, three. My target for a wave three is probably all the way up here to about the 161.8, which kind of puts us all the way up into this area. You know, this bottom right here probably will become a top. And this is likely just a wave one of a brand new uptrend on the much higher time frames. So very, very likely we should be looking for logs for probably the next several weeks. Going down to the 1 hour time frame, now we get that bigger structure. I would definitely be recommending longs. A lot of the times you do get a pullback after a bigger structure, but I wouldn't count on it. I definitely wouldn't be trying to go short. But if it does go down, if and when it does go down, I would be looking to get long for the continuation of this uptrend. If it goes down on this 1 hour time frame and breaks structure, I would throw my Fibonacci retracement on there. I would be looking for three-way pullbacks to go long. Hopefully for the continuation of what I think is a one, a two, and we're now in a wave three, probably a one, two, three of wave one on the very high time frames. So let's keep going. The Kiwi dollar, exactly the same analysis as the Aussie dollar. I think we're in a one, two, three, targeting the 161.8, someplace around the 0.59 area. Moving on to the US dollar CAD, because the Kiwi dollar is exactly the same analysis as the Aussie dollar. US dollar CAD finally gave us this break of structure we've been waiting for that proves to me this whole uptrend is over. Now, I think there's a good chance the US dollar CAD is now going to make a big downtrend that's going to last probably minimum of 3 months, probably going down to make the wave C of an A, B, C of wave Y on the weekly time frame. So that doesn't mean there's not going to be pullbacks. That doesn't mean they just go short and hold on. I'm just saying that we definitely should be looking for shorts, I think, for quite some time. Yeah, because if you go down to the 1 hour time frame, it definitely has that one, two, three, four, five look. I personally wouldn't recommend going long. I definitely wouldn't be trying to go long. But if it does go up, I would throw my Fibonacci retracement on the last series of lower lows, lower highs, and I'd be looking for three-way pullbacks to go short for the continuation of the downtrend. Just like the other dollar pairs, I think there's a good chance this is a one, this is a two, and we're now in a wave three. If it is a wave three is supposed to be the biggest, strongest wave of a trend. So some of these pullbacks might be quite small, and you definitely don't want to trade against a higher time frame wave three, which is why I would definitely recommend looking for shorts in a downtrend. So moving on to the US dollar Swiss, definitely a little bit different than the other pairs. A lot of the market movement on this pair is caused by the Swiss. I think this is a one, two, three, four, five. I think there's a good chance that the trend probably is over. I was expecting it to go up and grab liquidity up here, but it looks like it doesn't want to. I think we should be looking for shorts on this one also, and most likely it will go down to about the 161.8, which is right around the 0.885 area, probably over the next few weeks, probably it'll make its way down there. Maybe look at something like this, like a one, a two, a three, a four, and a five, probably down to around this 161.8% Fibonacci extension. So taking it down to the 1 hour time frame now, we definitely have what looks like a five-wave trend. So I think there is a pretty good chance that it's going to go up and make a correction to this trend. Now the thing is I definitely wouldn't recommend going long. I would never ever try to go long against a higher time frame trend because even though it looks like it should go up and make a pop ABC correction, it doesn't have to because a wave three is supposed to be the biggest, strongest wave of a trend. This thing could literally just make a little teeny pullback and just go down. So I would be looking for shorts at the end of pullbacks. I definitely wouldn't be trying to go long at all. If it does go up and if it does break structure, I would throw my Fibonacci retracement on here, and I would be looking for a three-way pullback to go short, which would likely be a Fibonacci retracement of this whole move down. But like I said, it doesn't have to do that. It could potentially just make a cut into this wave, go up a little bit, and just crash right down. Wave threes are supposed to be big, strong trends. Moving on to gold. Gold is definitely still in an uptrend. I do believe on the very high time phase, we are definitely still in a wave three. My new target for this wave three is the 261 or maybe 278. So I think that we're probably going to break the $3,000 an ounce on gold, and this is still just a wave three. So just like the other pairs, I would definitely not recommend trying to go short in a wave three. We are at the 250, but it already bounced from there once. I mean, it possibly is going to push beyond this area, maybe even up to the 261.8. So I definitely wouldn't recommend trying to go short on gold either. Now, this week I was saying that possibly gold was going to make a push down for like an A, a B, and a C correction. But I was saying this week that I definitely wouldn't recommend trying to go short for this wave C because what is likely to happen is that it's not even going to make a wave C. It's just going to keep on drifting up, which is exactly why I definitely would not recommend trying to go short in the middle of a wave 3 when the trend is up on the monthly, weekly, daily, every single time frame trend is up. Now, I would definitely continue to look for longs. If it does go down, if it does break structure, I would throw my Fibonacci retracement on there. I'd be looking for three-way pullbacks to go long. It does not even have to make a three-way pullback like that. It could possibly just make another higher low, and just push up to about that $3,000 an ounce area. So if it does break down, throw your Fibonacci retracement on there, look for three-way pullbacks to go long. If it doesn't break down, then continue to hold longs and continue to look for longs, probably on even shorter time frames than the 1 hour time frame. So moving on to the US dollar yen. I mean, like I've been saying for a while, I personally think there's a good chance all the yen pairs could just keep going down for a wave C. But if it does break structure to the upside, I'll be more than happy to start looking for longs again. But I think there's a pretty good chance that this is also over the coming weeks and months going to make a downtrend for an a B, and a C. Probably end up looking something like this on the very high time frames. So I would look for shorts on this also. Now I got my Fibonacci retracement on this one from here to here because there is a chance this move down is a correction to this move up. If we do get a Fibonacci bounce, if we do get a break of structure to the upside, it possibly could go up because it would make a lot more sense to me if this made an A, a B, and a C and then ended up going down. But don't count on this going up for a wave C. If it breaks structure, then it probably is going to go up. But definitely don't assume that it's going to go up. It could possibly break through every one of these fib levels and just keep going down. So the trend is your friend. The trend is down on the higher time frame. So I would definitely recommend looking for shorts in a downtrend. So all the other yen pairs are basically the same story, but I definitely do see the other possibility on this. I have an alternative count, which would be three waves of A, three waves of B, and then five waves of C, which would be an A, B, C, a B. That's my alternative count on the yen pairs. Definitely could end up doing that. So if it does end up breaking and holding above structure, I would definitely switch to longs. If it doesn't break and hold above structure, I would potentially keep an eye out for shorts because it might just keep on trending down. If you pay attention to structure, pay attention to your fib levels, usually you know what's going to happen because the market will tell you. So we definitely did break above structure, but it rejected structure almost instantly. And it definitely has five waves up. So we got our Fibonacci retracement on those five waves. This looks impulsive, this looks corrective. If it goes down again to a Fibonacci retracement level and then breaks up, then I potentially would, maybe try to go long if you are a short time frame trader. And then if it breaks this structure, then fine, hold on to your longs and start looking for longs in a big way. But I would be very cautious because the higher time frames are down. It might just go down, bounce, go down, bounce, go down, bounce, and just keep on going down. So I would assume that it's going to make an ABC correction down, but it could actually turn into a 1, 2, 3 and just continue the downtrend because the trend is technically down on the higher time frames. Exactly the same analysis on the pound yen. I am assuming, like I've been saying, that this is going to go down and make a big old wave C of 4, but I do have an alternative count, which would be three waves of A, three waves of B, and then five waves of C. That definitely may end up being what happens. And if it breaks and holds above structure, then we definitely will be looking for longs anyways. And then later on, down for the wave C. But until we break structure, we really can't say that that is for sure going to happen. This possibly could make a lower high. It could make a lower high. Just keep on going down. The trend is down, so I definitely am primarily looking for shorts in a downtrend. Now on the 1 hour time frame, just like the euro yen, this looks like five waves up. So I got my Fibonacci retracement on those five waves. We got impulsive down, we got corrective up. If this leads to impulsive down and then bounces off a fib level in a big way, then it probably is going to go up. It probably is going to break structure. But if it goes impulsive, corrective, impulsive, bounces, doesn't break structure, bounce, doesn't break structure, bounce, doesn't break structure, then just continue to look for shorts every single chance you get. If you pay attention to your structure, pay attention to your Fibonacci levels, then you should be trading in the right direction more often than not. So anyways, don't forget to join my free Discord trading community. And as always, thank you for watching. Happy Valentine's Day and have a great weekend.